what exactly is the Enhanced Multi-Style Equity Fund? The hint really is in the name. It is a South African active equity fund that gives clients a balanced style exposure, which means they don't have to call the cycle. And that makes it an ideal core equity holding.
My name is Dave Watson. I'm sitting here with Rademeyer Vermaak. Rademeyer is the head of systematic solutions at STANLIB. Today we're going to spend a bit of time unpacking the Enhanced Multi-Style Equity Fund. Rademeyer, I think if we jump straight into it, when we're looking at an active equity fund, what clients really want to understand is how do you select your stocks? Perhaps you can talk us through that.
Dave, so I think picking stocks is the most important component, and we follow a disciplined and rational bottom-up stock picking process. And when we pick stocks, we really try and invest at the intersection of quality and value and growth. Most of our peers follow a single investment strategy, such as only buying quality companies, only buying value, or only buying growth stocks. We invest in this flower in the middle, at the intersection of quality and value and growth. And in other words, what we're trying to do is to find profitable companies with attractive growth prospects and buy these at discounted valuations.
So Rademeyer, if you are picking stocks on that basis, how is that translated into a portfolio over time for clients?
Dave, so if we consistently pick stocks at the intersection of quality and value and growth, and we apply a robust risk management on top of that, we end up with a portfolio that, if you look back in time, back in 2016, our portfolio was actually cheaper than the benchmark, the Captrix, on a number of valuation multiples. So on a forward PE basis, we also had a higher dividend yield than the benchmark. We were slightly more expensive than the benchmark on a price to book multiple. However, looking into the future, the next couple of years, we were consistently cheaper than the benchmark across these key valuation metrics and all the way to today. So if you buy into this fund, and our portfolio is in essence a value fund, but it is also, by investing at that intersection of quality, value and growth, we build a portfolio that is of higher quality than the benchmark and consistently more attractive growth prospects than the benchmark. This really is what you want a core active portfolio to look like, to be consistently and fundamentally better than the benchmark.
Rademeyer, it all sounds fantastic, but I guess what we need to show for clients here is, has it done what it says on the tin? Maybe you can chat to us in terms of how the fund has delivered over time for clients.
So Dave, in terms of performance, our alpha target is 3% per year. And we have managed to generate that consistently since inception. We have a 100% hit rate over any rolling 3-year period, which means we consistently generate alpha through the cycle as you would expect a core balanced exposure to do. I think importantly as well, our alpha correlation with peers is very low to negative, which means that this fund can blend very well with other active managers in a portfolio construct.
It's a remarkable outcome for clients, and I guess just the sweetener on top is the fact that this fund comes in at bottom quartile costs in the space as well. I suppose just to wrap up, Rademeyer, if you can maybe give us the 3 key takeaways for clients when thinking about the Enhanced Multi-Style Equity Fund.
So Dave, the 3 key takeaways about the STANLIB Enhanced Multi-Style Equity Fund is that it should be used as a core long-term equity holding because it gives you balanced style exposure, meaning you don't have to time or call the market cycle. The second key takeaway is the fact that we invest at that intersection of quality and value and growth, and the alpha that comes out of that investment process is consistent but also uncorrelated with peers, meaning that you can unlock the only free lunch in investing of diversification by investing in this fund. And the third key takeaway is the fact that we have generated this top quartile performance at bottom quartile cost.
Thanks very much, Rademeyer, and thanks everyone for watching the video. Hopefully you walk away understanding the fund a little bit better.